Today, I want to talk about how a Goldman Sachs banker was just silenced for speaking out on AMC. I didn't report this yesterday as there wasn't enough proof to link the banker with the analyst target, but that proof has just been unveiled. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, you may remember last week, a Goldman Sachs analyst set a new price target for AMC at $175 per share. Joshua tweeted saying they are on their knees begging for you to sell your AMC shares for $175 per share, per Goldman Sachs' latest price target. But he added saying GameStop was at $500 per share with only FOMO buying and with no closing of shorts. So he said there's a zero chance he'll sell his shares at $175 per share after 2.5 years of additional illegal shorting. Now, this was obviously that screenshot of the price target at Goldman Sachs on AMC being raised to $175 per share. You can also see from this screenshot there isn't a specific analyst that gave this price target or price rating, which is why I didn't report it in my video yesterday. But again, as I said, you may have seen a Goldman Sachs banker has just been found passed away in a creek in New York. An echo chamber ad is saying this is what happens when you give AMC a $175 price target. Was it a coincidence that he was the individual that gave that AMC target? You decide. So it seems this analyst was silenced for trying to speak out against AMC and trying to give a realistic or somewhat realistic AMC price target, potentially without factoring in that squeeze. But again, you may be saying, Tom, where is the proof that this guy actually wrote the Goldman Sachs target? How do we know it could have been him? Well, as Crystal Ball added, he said, here's some more info on the Goldman Sachs banker, John Castick, who was found passed away in a creek yesterday. Apparently, John Castick was a big follower of meme stock accounts online and occasionally interacted with meme stock accounts. This article says that Castick seems to have been a follower of most of the big meme accounts and apparently occasionally interacted with some of them. In other words, a completely normal 20-something banker from New York. And interestingly enough, from that exact same Market Beat website where the target was originally given, that target from Goldman Sachs on AMC has now been scrubbed. You can see targets from Wedbush, Citigroup, Roth Capital and others, but that target for AMC is now gone, completely vanished. Clearly the shorts could not have analysts giving somewhat realistic price targets for AMC at over $150 per share. Clearly for the shorts, the only targets worth mentioning are those from Wedbush at $2 per share and below. Now, I also want to talk about how this actually makes a lot of sense and how Goldman Sachs is most likely one of the prime brokers, if not the largest prime broker, behind those AMC total return swaps. If you just search for Goldman Sachs and fine, you can see Goldman Sachs has recently had to pay tons of fines for swap disclosures and for short trade or short position reporting issues. Clearly, Goldman Sachs loves to report short transactions as long transactions and loves to violate swap disclosure reporting requirements. On top of that, we also know that Goldman Sachs has over $50 trillion in total derivative liabilities, with only around $500 billion of assets to support those derivatives. For some quick math, that's around 1% of their total derivative position, aka they're not using a leverage ratio of 5 to 1 or 7.5 to 1, they're using a leverage ratio of 100 times to 1 on their derivative positions. And importantly, let's also remember the fact that Bill Hwang actually wants to subpoena Goldman Sachs and their documentation for Bill Hwang and Archegos' total return swaps. So we know Goldman Sachs was giving total return swaps to Bill Hwang, potentially for AMC and GameStop, and that just forms part of their total $50 trillion of derivative liabilities on a 100 times leverage ratio. So even though Bank of America is the prime broker for Citadel, it seems Goldman Sachs may indeed be the prime broker for all other total return swaps. And maybe this is why that guy was silenced for giving AMC such a high price target from inside the institution itself. Also, you can currently get a guaranteed free share of Tesla, a $50 cash reward, and up to 15 free stocks, which you could always use to buy more shares of AMC, GameStop, or a vape. All you have to do is sign up to Moomoo using the link in the description below and make the required temporary deposit. Moomoo is free to sign up, it just requires that temporary deposit, but it's a really great way to help support me and to help support the channel. But not only that, Moomoo is also very easy to use, has tons of technical indicators and advanced charting tools, and their own options trading platform. Now, you may have also seen Aron tweeted yesterday or tweeted this morning saying many of you are incensed by the high number of failed to deliver AMC shares, and that AMC has once again been on the threshold securities list for multiple weeks. He said, "We repeatedly have gone to the New York Stock Exchange and FINRA, and did so again a few weeks ago in July, to put and to keep this entire situation on their radar." So it seems that actually Aron and AMC are trying to do something about these excessive and continuous FTDs on AMC. He is trying to do something about it, and he is trying to do it through the proper avenues going to those regulators. But obviously the main problem being that regulators don't seem to care. So it seems actually Aron isn't completely dismissing FTDs and isn't completely dismissing synthetics. He actually takes it very seriously and is going to the regulators. It's just the regulators that are paid off by Citadel that don't do anything. And that's why the ape Jeremy from Utah actually has a great idea, which is to expose the crime ourselves. Now you may be saying, Tom, how can we expose the crime ourselves if even Aron is trying to get it exposed, but FINRA and the New York Stock Exchange don't want to do anything about it? Well, the ghost trader has tweeted saying AMC investors should call the New York Stock Exchange and FINRA themselves, because Aron has made them aware twice now, and now it's the investors' turn. Even if it's Aron, the CEO of AMC, contacting the New York Stock Exchange and FINRA, Aron and AMC is just still one individual person. The best way to make change happen is with multiple people, or a potential even better idea from Nate is to open lawsuits against FINRA and the New York Stock Exchange. What I think we need is a class action lawsuit against FINRA and the New York Stock Exchange of all of us together, including Aron, including AMC, including other CEOs that believe their stock to be synthetically shorted, and it needs to be the biggest lawsuit possibly imaginable. As Nate says, we have evidence that millions tried to get information and tried to make them aware of this persistent fail to deliver issue, and they still ignored us. If a firm sworn to protect investors does the opposite, and millions of us can confirm it and confirm it in other companies, not just in AMC, they're in big trouble. I think what we need is a multi-billion-dollar class action lawsuit, including pretty much everyone, against FINRA and the New York Stock Exchange to actually drum up a big fuss. And finally, I found this tweet from Darren really interesting. He says that it's really interesting these shorts have been closing out of short positions on nearly every other heavily shorted growth stock in the entire market while trying to continue shorting AMC daily. These shorts are literally closing out of their short positions in tech stocks and in growth stocks just to funnel that money into more AMC shorts. And that is why pretty much every single heavily shorted stock in the market has run over the last 6 months continuously, while AMC still continues to be held down. It's because the shorts are putting everything they have, including the kitchen sink, into shorting AMC, and even closing out of all of their other short positions in the meantime, still trying to hold AMC back. But it won't be long until they've closed out of all of those other short positions in the market. That's why we're seeing stocks like Carvana, Upstart, and many others that are already up 10 times their original value, or up 1,000% so far this year. Eventually they will run out of shorts elsewhere to close, and at that point they will run out of money to continue holding AMC back. And obviously when that happens, we will see hedge funds being stressed financially, being squeezed, being margin called, and being liquidated. And at that point too, I'm sure we'll be seeing many other people passing away in lakes when they expose the truth about AMC. And that may actually be why literal senators of the US are currently shorting the US stock market. As the inverse Cramer tracker tweeted, he said Senator Thomas Carper is literally shorting the American economy. He bought up to $60,000 of an ultra-short NASDAQ index. And adding saying, can someone tell me why a sitting congressman is allowed to bet against his own country? Maybe the senator knows a huge credit event is coming that will ultimately cause the market to crash. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.